Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for July 22nd, 2018. Hope you guys are having a great weekend. Before we get started on the analysis, make sure that if you haven't tried out ForexAnalytix, it's just $1. Try it right over here, $1 for 10 days. Once you sign up, make sure that you download the mobile application or the tablet application, whether you're using iOS or Google Play, or excuse me, an iOS or Android operating system. You can get it in the Apple Store or Google Play. Make sure you have that so you have all of our information, all of our updates, all at the palm of your hand. And with that being said, let's get started and going into next week. So next week should be actually a fairly busy week as far as trading goes. There's a lot happening despite us being in the middle of summer. There's obviously some big trade tensions happening. We have like the EU Juncker is visiting Washington on Wednesday to talk to President Trump about the tariffs on automobile imports. And you know, the European, I guess you can call it retaliation. That's going to happen on Wednesday. Also this week, there's NAFTA negotiations happening between Mexico and the U.S. Canada is not part of those talks. So the continued trade tensions is going to be front and center all week, which is keeping most traders on their toes. Now, as far as price action in the currency market goes, I'll just show you right here with the euro dollar. You can see just in the euro, we're in a pretty tight trading range. However, if you remember last week, we were testing this upper trend line here of this, you know, you could call it a wedge, possibly a triangle through the lows here, but we're testing the upper end of it. And you know, the risk is that the dollar could come under pressure, because if you saw how the dollar reacted at the end of the week, the dollar was pretty much weak across the board. You had the euro dollar that was pushing, like I said, up against this trend line. There's a chance that we take on the 118, possibly 118.50, especially if you know, talks between President Trump and Juncker go well on Wednesday. We could see the euro testing the upper end of this this resistance zone, if you will. If you look at the cable, you know, the pound has been marred by headlines, obviously with Brexit, but you know, a lot of the negativity is probably baked in, and the pound broke below the 130, probably stopped out a lot of longs, and had reversed quite aggressively on Friday. So we can see that the pound is back above 131, and as long as there's no real big negative headlines for the UK, we could really rally. Especially last week, there was some soft data that came out last week in the UK, and the pound managed to rally back by the end of the week. I mean, if you look at the weekly candle here, and you can see how we plunged through these lows, we plunged through a lot of support, probably stopped out a lot of traders. And you know, if the pound, if we have any type of headlines that are positive for Theresa May or the UK, we could see a recovery in the cable, especially with the dollar a little weaker, you know, across the board. Speaking of which, let's take a look at the Aussie dollar. The Aussie dollar, you know, you would think with the ongoing trade tensions, especially with China, the Aussie dollar would have sold off a little bit more. The U.S. dollar has been extremely strong against the renminbi, and actually, you know, what I should do is I'm going to take you over to the yuan or the renminbi really quick, so you can see what it looks like. We have been rallying aggressively over the last couple of weeks, and you can see this big reversal in the U.S. dollar CNH. So if the yuan starts to bounce a little bit, and you know, you can see we rejected the 78% retracement pretty good. If we pull back a little bit here, that might actually strengthen the Aussie dollar, and we've seen a big inverse relationship between you know, the CNH and the Aussie and the Kiwi as well. So you know, that's something to keep in mind. Just I think if you're dealing with the Aussie or the Kiwi, watch the the renminbi pretty closely, and you know that goes the same with the dollar yen. The dollar yen, one of the reasons why traders have believed that the yen had been as weak as it was is because of the won as weak as it was. Now we saw that reversal on Friday in the CNH. I just showed you the won. Look at the dollar yen. The dollar yen has actually pulled back to the weekly breakout point. Now I tweeted about the dollar yen last week, late last week, I believe on Friday. And the thing about the dollar yen is I want to talk a little bit about this as well. And I am short the dollar yen. I shorted it on Friday, meaning I bought yen, is because we had this massive breakout 2 weeks ago, and I got stopped out of a short dollar yen. I was shorting it, you know, right up here, sub 111, and when it broke through the 111, you know, 30-40 level, I got stopped out. And I have to imagine a lot of traders went long dollars, short yen, and we saw this massive move come out of this, you know, multi-year trend line. You can see the weekly chart, multi-year trend line here. Well, that reversed course pretty aggressively, and as the, you know, trade tensions continue to rise, and if we see the won bounce a little bit, the yen could very easily come back to the 200-day moving average on the dollar yen, which would take us back down towards 110. So I think the risk here is, as I pointed out with the euro and with the cable and with the Aussie, is continued dollar weakness. I think that's entirely possible. Now, one of the other charts I wanted to focus on just for today is I wanted to focus on, well, actually there's a couple charts, and I'm gonna take you through some of my charts, is the US dollar Canadian here. Now, the US dollar Canadian had a massive reversal on Friday. You can see this is a, and by the way, this is dark cloud cover. If you're not familiar with the candlestick formation, that should lead to some weakness. Now, what I'm looking for here with the dollar Canadian is a move back towards, or maybe even sub 130. I think we're going to retest this this multi-year trendline break. I believe that we're going to pull back a little bit here towards the. This is a 50% retracement that would take us back to 129.50. 130.50 will be support, which is a 38% retracement. You can see the fib level right here. It's a 38% retracement, but if we break through 130.50, then that should take us to 129.50 really quick. For those of you that are looking to buy dollar Canadian maybe on the cheap, that might be, you know, one of these two levels might be a level to pick it up. And you know, with the US dollar Mexican peso, I guess we can talk about it in the same light, is that we have seen a pretty big move in the US dollar Mexican peso after completing this Gartley pattern from several months ago, back in June. I guess several months ago, is last month. We've dropped quite aggressively. We're failing to take out that 200-day moving average, which could lead to a further move towards the 78% retracement and 161% extension of this move. Here, I'll take this fib level here. You can see it right here. 161% extension and 78% retracement, and trendline retest would take us down at 1850, 1860 in the US dollar Mexican peso. And especially if some of the talks improve between Mexico and the US this week, that's entirely possible. And by the way, that date, let me see, that the NAFTA negotiations is going to be taking place on Thursday, when Mexican Economy Minister Guajardo meets with U.S. Trade Representative Lighthizer in Washington on Thursday. So if we see an improved, you know, bilateral talks between Mexico and the U.S. By the end of the week, this next week, we might be trading back down towards this 1850 level, which I still think is going to be an opportunity for a bounce, considering how, you know, oversold. Well, we're not quite oversold on the daily yet on the U.S. dollar Mexican peso, but we might be by the time we get down there. So you got to watch relative strength. We might be coming right down to this oversold level. One other thing that I wanted to point out today particularly is I'm going to take you over to precious metals. Gold, as you can see here, gold had an aggressive bounce from the 618 retracement. It's the 618 of this, way over here in 2015 lows to the highs, which was in 2016 highs. We had a retest of the, I'm sorry, this was the, 50% retracement of that move. The 618 retracement or Fibonacci retracement of the December 2016 to the highs of 2018, that's a 618 retracement. Then 127% extension of this last leg higher that we saw in 2017, 2018. So we hit this big confluence of support on gold, and gold has bounced aggressively. And I think if gold gets back above 1236, that could argue a continuation of dollar weakness, because as I pointed out in the euro and the pound and the Aussie and the dollar yen, they all look vulnerable to more dollar weakness, and same with the Canadian as well. And gold getting back above 1235 could really lean into that dollar weakness. And silver is the same thing. Silver hit 161% extension. We're at levels that, historically the silver market tends to find some support down here. So if silver gets back above 1560, 1570, again, that's just another feather in the cap, if you will. If you're looking for dollar weakness, it would be confirmed by both gold and silver moving higher. So those are just some things that I'll be paying attention to next week. Now, there's other key economic events that are happening next week as well. On Tuesday morning, we have a lot of PMIs out of Europe. We have services and manufacturing PMIs across the Eurozone. Tuesday night or Wednesday morning in Australia, which would be Tuesday night here in North American trade, we have inflation data out of Australia, excuse me. And on Thursday, we have the ECB meeting. Now, I'm not expecting a lot from the ECB. Matter of fact, I think the ECB is going to be fairly steady. I don't know if it's going to be a huge trading event, but we should take note that the ECB meeting is on Thursday. And also on Thursday, we have durable goods. And then on Friday, we have advanced GDP in the US, where the market is looking for advanced GDP to ratchet up to over 4%. So, obviously the bar is starting to get set pretty high with US GDP. So at least with expectations. So, if we don't reach those expectations, how's the dollar going to respond to the advanced GDP reading on Friday? So, again, there's a lot happening, especially being summer. Typically, it's pretty quiet, but with all the trade tensions that are obviously very heightened, there's probably going to be no rest for the weary for those of us that are trading this summer. So guys and gals, if you like this video, make sure you click the thumbs up button. It always makes me feel good, and makes our team that works tirelessly putting these videos out on social media for you. Just make sure you give us a thumbs up. Make sure you also click the bell icon so you get notified when we have new videos being uploaded to YouTube, which we have so many great interviews on our FACE webinar with Dale Pinkert. He brings on some of the best traders, economists, market idea people around. So make sure you don't miss any of those great interviews, because I know it's not always convenient for what you're doing to listen in live, so at least you can listen to the recording. And make sure you sign up for ForexAnalytix, and remember, it's just $1 for 10 days and you get this great package. Guys and gals, my name is Blake Morrow. You've been listening to the Week Ahead video. Thanks so much for listening in. Have a great remainder of your weekend.